Good morning, everyone. Thanks for joining us this morning with TVFCU's mortgage webinar we're doing monthly. My name is Bryan Fryar. I'm the mortgage sales manager here at TVFCU in the real estate department, mortgage department. I'm being joined by one of my mortgage originators, Tina Peters. Morning, Tina. How are you doing?
Morning, good. How are you?
Doing great, doing great. Just a little bit of intro about myself. I'm a mortgage sales manager. I've been in the mortgage business since about 1997, 98. Done various roles from origination to management, etc. Right now I'm the sales manager. Basically, I have a mortgage sales team of 10 originators and 3 loan officer assistants. I'm going to hand it over to Tina. Tell us a little bit about yourself and what areas you cover for TVFCU.
I have been in mortgages since 2003. I was out for a little while, stay-at-home mom for a little while. So total experience is about 13 years at this point. And I have been a loan officer's assistant. I've been a processor, and now I've been an originator since mid-2018. And I currently cover Saudi Daisy, Dayton, Ray County, Bledsoe County, Sequatchie County, all that area.
Yeah, and like all of our originators, they do have designated areas they cover. But of course, Tina, you do loans in Georgia, Tennessee, Florida, Alabama, all the areas that TVFC covers.
Absolutely.
If you're looking for a mortgage loan, if you're in her area, definitely give her a call or shoot her an email. If you're not in her area, reach out to her anyway. Tina can cover all these areas. Comes with a whole great wealth of experience. I know in my experience, Tina is one of the best mortgage originators I've ever worked with. So good job,
Thanks,
Tina.
boss.
She constantly gets emails and kudos from our membership and from our realtor partners about what a great job she does. We try to do the best we can when working with our members and our realtor partners and our other friendly competitors who send us loans sometimes. Which is what leads me to what we're going to be talking about today. Land loans, also officially known as Unapproved Property. This is one of those loan programs that TVFCU is very well known for. We have one of the best products. I'm just going to toot our horn here a little bit. One of the best mortgage land loan unapproved property products in the Chattanooga, North Georgia area. I'm going to let Tina talk about it a little bit more and expound on what that program is and why it's so good. Tina, tell us about land loans.
Our land loans are a 15-year term, and the thing that makes them unique compared to other lenders is we only require a 5% down payment. A lot of other lenders out there that will do land loans require 20% down payment. So that's huge for a lot of people. Most people don't have 20% to put down on a house, let alone a piece of land. So we do get a lot of people coming, to purchase land through us because of that specifically.
Yeah, and that's a big thing for us. And again, we have friendly competition, other lenders that do have unapproved property products. Sometimes require 20 to 30% down. Putting 5% down that does help the borrower out, not use all their cash they want to use. One reason, and I know I've noticed this, especially the past 6 to 12 months, but over the past few years, since I came to TVFCU in 2008, our land loan product has always been very popular. But one reason, I know Tina can maybe expound on this a little bit, but with the limited supply of homes out there right now, we're finding people that either don't own a home or do own a home and really can't find another home to buy, either to upgrade or to downgrade a little bit. They're running into that. So they've got a little money on hand. So they're looking at maybe investing in unapproved property. Is that what you're seeing too, Tina?
Yeah, seeing a lot of that, definitely. People have been looking for places they want to purchase, and they're just not finding what they want out there. So they've decided to purchase a piece of land and then eventually build on it.
Yeah. And I'm noticing that, seeing a lot of that. Land is one of those things. It's a finite product. There's once it's bought up, it very rarely comes on the market. Sometimes we are finding a lot of people moving in from out of state too. If they purchase a home, then they may be looking at purchasing some land, or they're planning on moving to the Chattanooga area and maybe building later on. So we have that product available for those people that want to do it. So I'm going to switch gears, and I always try to cover this when I'm talking about purchasing. But just a couple of minutes, and I'll give my little spill here. If you are looking at purchasing some land or even a home, I always recommend go ahead and put together your budget. Know what you can afford. Look at your monthly outgo, what you currently pay. Look at your pay, what you make, what you bring in. You want to take in consideration where you're going to be 3 to 5 years from now, 10 years from now. You want to make a plan. Then once you've budgeted, then you'll want to talk to Tina, hopefully, to get your pre-qualification, which I highly, highly recommend to get pre-qualified nowadays, especially with a lot of sellers and their realtors. They're not going to take an offer. And I know, Tina, you're going to agree to this. They're not going to take an offer unless you're serious. And the way you can show them serious is to have a pre-qualification. So I'm going to hand it over to Tina. What's involved in, if I want to get pre-qualified and I'm not a member of the TVFCU, what do I need to do?
Super easy. You just contact me, and what I do is I send you a link to our webpage where you can go online to do a pre-qualification application. And then once it's submitted, we are notified via email. So as soon as I get it, I give it a review, pull the credit, call you to discuss if there's any questions. But the whole process is fairly simple, unless as a person you have complicated financials, then might take a little bit longer. But generally, I can whip through those in about 15-20 minutes max.
Yeah, very quick, very easy. Do want to caution everybody. Make sure when you're filling out that application that you're honest with us and let us know, because we do have to verify all that information you do put on an application once the file goes into processing. You signed a contract, etc. So make sure you're honest and upfront with us. Let us know your situation, because we're working for you. We want to get you in the best program and get you pre-qualified and hopefully get you closed, because that's my job. That's Tina's job. We're here to do loans. We're here to help the membership. So make sure on that application you're honest and upfront with us. There does come some situations where we may not be able to pre-qualify you. And I know Tina does this. I did this in my career. All my originators. If we can't pre-qualify you right now, either due to a credit situation or an income situation, we're gonna talk to you and try to give you a roadmap on how to get there. Maybe 12 months from now, 24 months from now, depending on what your situation is. Tina, kind of go through a couple. I know there's two things that I usually would run into pre-qualifying somebody that we couldn't pre-qualify them. One was an income issue, especially if they're self-employed. The second one might be a credit issue. So kind of expound on those two issues, what you run into, and kind of give everybody some hints and tips there.
Honestly, on land, I think the biggest issue that I come across is people having cash at home and wanting to use that cash at home towards their down payments and closing costs, which is a big no-no. Any funds used to purchase a property, which is down payment, earnest money deposit, closing costs, all those funds need to be verified, and cash cannot be verified. So if that is the case, some people have to, and I've done this several times, they have that cash at home. They have to deposit it, and then they have to wait 2 full statement cycles, because when we submit a file to processing, we need to submit that file with 2 current bank statements. When I submit those bank statements, the underwriter reviews them. If she sees that cash deposit on there, we're going to have to deduct that amount from their available funds to use for the purchase. So as an example, today we are on March 17th. If somebody tried to get pre-qualified and they had cash, they'd have to deposit it before the end of the month and then wait April, May, the beginning of June is when we would have 2 statements available that we would be able to start that process for that purchase. So that is definitely a challenge. Employment wise, the challenges are part-time. If you are a part-time person, you need to make sure to relay that to us, because part-time income is calculated a little bit different than full-time income. We do have to have a history of part-time income in order to use it. So we have to know if you have been employed part-time less than 2 years, because that's the cutoff. The other problems come in when somebody goes from being a W-2 employee to a 1099 employee. A 1099 employee is considered an independent contractor or a self-employed person. And if that is the case, we need a 2-year history of that income reported on their tax returns, or else we are unable to use that income. Those are some of the challenges of the employment part of it and the income.
Yeah. And I know in my career, I see, and people that are self-employed, a lot of times they write off a lot, which is great. If you're self-employed,
Hmm.
you are out there, you're taking a risk, you are self-employed, you do get to deduct any losses or anything like that, but it does impact the income that you state on your tax returns. Could impact, your debt to income ratio too. So if you are self-employed,
Absolutely.
be aware of that. My father was self-employed for 30 something years, and there were times when he was able to write off things, deduct some things, some losses. But it does impact that final number on what you show in your last 2 years tax returns, which we generally take an average of the last 2 years divided by 24 months, and that's what we come up with a monthly gross income. So everybody do be aware of that. And like Tina said, we see a lot of people that used to be a W-2 employee and they switch over to a 1099. And then once they do that, we do need a 2 year history of that too. So that's something that does impact people. And something we just noticed, we run into. You'd said something about cash, using those for your down payment or closing costs, or earnest money. I know, for years I always heard cash was king, and in the mortgage world, cash is not king.
Right.
It does have to be sourced, it has to be verified, it has to be seasoned. So that cash is not king in the mortgage world. People are like, well, I have the money. You can see the cash right here. That's verifiable. We don't know where it came from, and that's the
Right.
issue right there. So in order to verify it, it has to be an account in your name, with 2 month cycles of a statement, and can't be shown being deposited, because if it is shown being deposited, it's going to be questioned, and we'll have to remove that as far as counting it towards your money.
And
Big
that's like a standard underwriting guideline. That's not just a TVFCU rule. That is everywhere
correct.
you go, you're going to run into that same issue.
Correct. And secondary market lenders, Fannie, Freddie, FHA, all them, the same thing. You're going to run into that. It's a standard mortgage practice rule in the industry throughout the United States. So everybody, please be aware of that. Cash is not king when it comes to the mortgage world. So you want to get that money in an account where it can be verified. Uh, and Tina, real quick, just take a couple minutes. Let's expound on what funds can be used for down payment or closing costs, and not cash. But let's talk about what else we can use.
Anything on deposit in your own personal checking, savings. You can use retirement funds. Always have to be aware of possible penalties for withdrawal if you have retirement funds. 401k. Some people aren't aware that some 401k financial institutions will allow you to borrow against your 401k at a lower interest rate. And that is actually totally fine with us. And actually, that loan does not count against your debt to income ratio. So it's not going to have a negative effect on your ability to qualify for the loan. We also, I believe, recently just started allowing gift funds on land.
Yeah.
And gift funds do have to come from a family member, close relative, could be a fiance if somebody is engaged. And we have you complete a gift letter with that person stating that no repayment is required.
Yeah, that's correct. So gift funds are allowed. Just to reiterate, gift funds are allowed whether you're buying a land loan or you're buying your primary residence. Gift funds are not allowed if you're buying investment property to rent. So just an FYI on that. Some people do get confused on that, and we have to let people know that.
Correct.
But in our subject today, land loans, it is allowed through TVFCU. Um, Also, too, in talking about funds to close and everything. Um, Generally, whenever somebody signs up an application and they get a contract, we will give them their disclosures. They call them 3-day disclosures. Federal government requires that you receive certain disclosures at least 3 days of your application, and not a pre-qualification, but your full application. In our case, if you get pre-qualified, you're looking for a property. Once you find a property, you sign a contract, you get that contract to us, that starts your 3-day ticking right there. We do have to disclose, and we do disclose within 3 days and give you your loan estimate, a bunch of other documents. On that loan estimate, it's going to show how much money funds are going to need for closing. When you do your pre-qualification, Tina or any other originator is going to give you an estimate of how much money you will need for closing, whether it be the down payment and or closing costs. Now, talking about closing costs, Tina, kind of talk about who pays for closing costs.
Generally, it's the buyer that pays for closing costs, especially on land loans. When somebody's buying a primary residence, sometimes you see a seller credit, a credit from the seller to go towards the buyer's closing costs. You don't see that as much on land loans, I think probably because the amount that is borrowed is a lot less.
Yeah.
In general, land loans are lower than the primary resident type of loans.
And it is allowed. The seller can pay for your closing costs if you
It is.
negotiate that. Has to be on the contract.
Right.
So in a best case scenario, if the world were perfect and you talk to somebody and and by the way, I recommend using a good local realtor when you are purchasing land or any home or any property, especially in today's market. Because they're gonna fight for you. They're gonna go negotiate for you. Part of that negotiation is to see if the seller will pay for your closing costs. And
Right.
in a perfect world, you would only have to put 5% down. The seller could pay for all your closing costs. So doesn't happen a whole lot. Like Tina said, we don't see that, especially in today's market. But it is possible, and we do allow that.
That is correct. Right now, however, we're seeing it a little bit less because the market is so competitive.
Yeah.
So
Yeah.
think of it from a seller's point of view. If they're receiving a contract that says, we want you to pay for some of our closing costs, beside, next to a contract that says we're not asking you to pay any closing costs.
Yeah.
The seller's going to go for the one where they don't have to pay the closing cost. So that is happening a lot more now. A lot of realtors try to avoid having those contingencies on the pre-qualifications when they make those offers.
Yeah.
Some people can't help it, and if that's what that is what you need to accomplish your goal, then you just go for it, and eventually
Yeah.
you should find something that a seller that'll work with you.
Yeah, yeah, and sometimes it happens in either a transaction between relatives or something like that. They'll agree to pay for the closing costs.
Right.
It's just tied in with the sale of the land or the home. So, like Tina said, it's not happening a whole lot these days. I rarely see it, especially on land loans. But every now and then you do see it. It is allowed on our land loans, our unimproved property. So just a note. And again, I want to reiterate, really, if you're looking at buying land or buying a home or anything like that, do use a good realtor in today's market, especially. It is very tough. It's competitive. I know some people have seen like viral videos of all these buyers at these homes and open houses. So if you're looking to buy, you do want to use someone who is competent and who's going to work with you. And again, TVFC, we work with a lot of good local realtors in the Southeast Tennessee, North Georgia area. So do want to be aware of that. So Tina, you've gotten pre-qualified. We've given the buyer the letter, potential buyer the letter. It's on our letterhead, has our signature on it. Generally, that's good for 60 days. We can extend it in some cases on that letter. But what happens once they get a signed contract? Kind of walk me through just a 2-minute version of what happens from start to beginning. When, say, I have my purchase contract in my hand and it is signed by both buyer and sellers.
Gotcha. Once we get a copy of the purchase contract, we are then able to start the loan process on our end. So once I receive a purchase contract, I will complete the application and disclosures and send them out to the borrower along with a list of the documents that we need for the process. Once I get everything back and they have signed everything, I submit the file to the processing department, and the processor will order the title search and the appraisal. Title search and appraisal right now, depending on where it is, usually taking about 2 weeks or so, 2 to 3 weeks. Once everything comes back in, actually, after it's ordered, the file is submitted to the underwriter for conditional approval. The underwriter reviews everything, and then we'll let the borrower know if any additional documentation or information is required by the underwriter. And then at that point, we just wait for the appraisal and title search to be completed. Once everything comes back in, the file goes back to the underwriter for final approval, and then it is transferred to our closing department where they will contact the title company and get this closing scheduled.
Yeah. And speaking of title companies, TVFC, we work with all the local title companies. It generally, it's going to be spelled out on the purchase contract which title company is to be used. I think traditionally, usually that is decided by the seller, but that is part of your negotiation too. If you're a buyer and you have a title company in mind that you want to use, definitely let that be part of your negotiation. Again, we work with pretty much all the local title companies, North Georgia, Southeast Tennessee, Alabama, and of course we do loans in Florida too. But yes, we work with all the title companies and try to expedite that and get your loan moved through. And your closing is going to be at the title company generally, so just be aware of that.
One thing I want to mention, though, we do not do land loans in Florida.
Correct. That's right. Thanks for throwing that in there.
We
Don't do
will
land
do them
loans in
in
Florida currently.
Tennessee, Georgia, in DeKalb and Jackson counties in Alabama.
Correct. That's right. So do be aware of that. We've got a list of questions. I'm going to run through this. One of the questions, because Tina had mentioned appraisals, and we'll talk about this just a little bit more, because I have a few things I want to throw in about appraisals, because we do run into these items that come up on appraisals. And I know, Tina, you know what I'm going to be talking about here in just a second.
Right.
So one of the questions is, how do you determine value on land? So to answer that question, I'm going to go ahead and answer that one. To determine value on land, we're going to order an appraisal. What is an appraisal and who does it? Generally, what we do is we order through what we call an AMC, appraisal management company. It's an independent company that orders the appraisal for us through a third-party appraiser. And of course, the AMC appraisal management company is a third party as well. We want to have an independent third party give us a value of that property with no what's the word I want to use, any influence or anything like that. Any undue influence, because we need to know what that land is actually worth, and to see if that property, for what it's being sold for, is actually matching the purchase price. Some cases might be worth more. We have run into some cases, sometimes the property is valued at less, because in an appraisal, they're going to use comparables, at least 3. Sometimes they use up to 6 comparables. And what comparables are, those are either property or a home that's similar size, it's near to the subject property. It's also been sold recently, within, preferably within the past month, but 6 months generally. And it's going to be comparable to our property to justify that value. So it's not, everybody thinks, well, an appraisal is just an opinion. Well, it's an opinion backed up with documentation, facts, etc. So do be aware of that. And I know, Tina, you're going to agree with me on this. What we run into when people are doing unimproved property loans is an appraisal's done, and come to find out there is a structure on that property. It is called unimproved property for one reason. There are no improvements on the property. There are no structures.
Right.
I know I've seen, and Tina, you can tell us a little bit more. I've seen some warehouses on unimproved property. That's a no-go. I've seen homes that are on a property. That's a no-go. I've seen manufactured homes on a property. That's a no-go. What else have we seen? Hunting cabins. Again, that's a structure. Unimproved property is not supposed to have any structures on it whatsoever. If in doubt, let us know. If you found a property and you find some small little shed or barn, let us know about that. But generally, structures are not allowed on unimproved property.
Right. A shed or a barn can potentially stay there, and what happens is it's just not given any value.
Correct.
But any structure that at one point or still does have any type of power or running water going to it can be considered a livable structure, and therefore would either have to be removed before we close the loan, or we just wouldn't be able to lend on it at all because of that structure.
Correct. And I've seen manufactured homes on property. Again, that
yes, old abandoned single wides.
Yeah, those things, structures will need to be moved because it is an unimproved property loan. And talking about small structures that have running water or power, we've seen some that have multiple rooms, may not have power and electricity run to it, but it is still a structure. So we need to be very, very careful. I've seen some that have a very small little wooden barn, about the size of a bedroom. In some cases like that, we'll need to look at it, but that might be acceptable, depending on what it is. One time I had one of my originators said, hey, there's a small storage shed they have on the property. Is it going to be okay? We looked it up. We saw the pictures. It was a metal prefabricated building that had 5 bays that this seller had kept their car collection on. So that was a no-go on that one. It was more like, it almost looked like a commercial building. I don't know, probably about 3,000 square feet. So that is definitely not unimproved property. In those cases, sometimes we can refer those to our commercial lending side. They might be able to do that loan. We will do our best to try to see if we can make that loan, but sometimes we do have to say no. So just word to the wise. Again, unimproved property land loans cannot have any structures on it. I'm going to read off a few of these other questions. We had some great questions from everybody, and want to kind of go through these real quick. What are the qualifying requirements to receive a land loan? Tina, I kind of went through that. You want to do an application to get pre-qualified first. Highly, highly, highly recommend that, because you want to be serious when you are making that offer. And one way to show you're serious, you do have that pre-qualification letter in hand on our letterhead. So definitely want to do that. What are the benefits
Let
of
me
buying?
add to that, Brian.
Yeah.
5% down is the minimum. Of course, we discussed 660 is the minimum credit score.
Yeah.
We do pull all 3 credit bureaus and go by the middle score. Has to be 660 or higher. And then as far as debt to income ratio goes, we can go up to a 50% debt to income ratio on the land loans.
Correct, right, and that's going to be based off of gross income too.
Right.
We generally like to stay under 43%, but we can go higher, like Cena said, up to 50. We want to make sure, and people say, well, what business is that of the lender? I pay my bills, I'll be able to pay this back. Well, we have to make sure you can pay this loan back. We are in the business of making loans, not in the business of foreclosures. So people I've had phone calls. Well, I'm putting 30% down. If you guys have to take it back in a foreclosure, you guys are going to come out on it. And like, well, that's not exactly how that works. We want to make good loans. We don't want to be seen as having foreclosures. We want to make, and also too, being a member and everything, we want to make sure that you're able to pay this back. We don't want to put you into something that you're not going to be able to pay back. That's just not right for you. It's not good for the credit union. It's not good for just being a good citizen or a borrower. And everybody talks about what happened back in the old days prior to 2008. A lot of loans were made. And I know Tina remembers this because she was in the business back then. They had a lot of what we call the liar loans, no income, no asset verification.
Stated income, stated assets.
Yeah. A lot of that has gone the wayside now because we don't want to be doing those types of practices again, putting people into a situation where they'll fail. We don't want to do that. If you're not ready to buy a house right now or land, that's okay. Make a plan to get to a point where you will be in the future.
Right. And for some people aren't aware of what goes into calculating a debt to income ratio. It's going to be anything that shows up on your credit report. So we're talking about mortgages, auto loans, student loans, credit card loans, note loans, installment loans, anything that's reported to the credit bureau. Quickly on student loans, doesn't matter if it's deferred or if it's going to get wiped away. If it shows up on the credit report, we have to count at least a 0.5% payment against you. Most student loans don't show a payment because most of them are deferred right now. And if that's the case, we take the balance and we calculate a 0.5% payment.
Right.
So it's everything that goes on your credit report, and then your housing expense. If you rent, rental, monthly rent, your mortgage, homeowner's insurance, property tax, HOA dues, stuff that is not calculated, utilities, car insurance, cell phone bill, stuff like that is not calculated in your debt to income ratio.
Correct. And there are a few instances I've noticed, and I know you run this too, where we get documentation from a borrower and they might have a loan showing up on their pay stubs or something like that, a debt.
Volkswagen.
Yes, car leases, which is great for Volkswagen employees. I'm very jealous because they get a really good deal on those, but those do show up and we have to count those. So
made me think of one other thing. Alimony and child support, that is counted in your debt to income ratio. Sometimes that doesn't show up on credit reports and sometimes it does. Child support is the only thing that occasionally shows up on credit reports, but if it's not paid through the state, it won't show up. So you are required to tell us if you are required to either pay alimony or child support or receive alimony and child support and use that as income.
correct. And there are some declarations that you have to sign, say yes or no on the application. One of them is if you pay alimony or child support or receive it. Again, that just goes back to being honest on your application. And also too, there might, like I said, there might not be some debts that show up in your credit report. Let us know about those because that can have an impact on your pre-qualification. So that's a big deal. We've run into that before where someone, oh, I forgot I have to pay child support. Well, if you marked yes on your application, we're going to catch that. We're going to have to ask you about it too. So again, be honest because we do have to verify this information. And you don't want to get a situation where you get into the loan process and you didn't tell us about something and then it's going to kill the whole deal. So let us know. Help us help you is what I always say.
Right. And once you've been pre-qualified to purchase a land, a home, anything, do not apply for any other credit
Yes,
for
yes.
anything. Doesn't matter what it is. Don't do anything without talking to your loan originator first.
Yeah,
A lot of times that's a deal killer.
Yeah.
If a debt shows up throughout the process, we have to count it. We do a soft credit pull just prior to closing. So if anything was applied for and received through that process, it will show up at the end, and you could be at the closing table or even before closing table and everything get canceled because now you no longer qualify for that loan.
Yeah,
So you definitely don't want to apply for any type of credit if your intent is to buy any type of real estate.
correct. Or even if you're refinancing, you don't want to do anything like that because it
Right.
can have an effect. And we do get alerts. Most of your mortgage lenders nowadays, once they start the loan process, they're signed up with the credit bureau. If your credit is pulled, they're going to get alerts, and we're going to question that. Hey, saw that you just applied for a MasterCard. What's going on with this? Or you applied for a car loan. What's going on with this? Because we do have to verify this information, so be careful. Leads me to my next one too. We run into this a lot, especially in today's job market. People quitting their job, going to another job. Tell us what's wrong with that.
We need a history of that income. So you can't, and I actually just had a borrower do one. Luckily it was a long closing date, but somebody just changed jobs in the middle of the process on a land loan. And she went from one full-time job to working for a restaurant, which was actually two different restaurants owned by the same company, but they was like technically part-time at each.
Yeah.
Luckily, because we were able to get some type of letter from the employer stating that she is actually full-time, we were able to use that income, but that almost went south.
Yeah.
So we do, when you apply for a loan and get qualified for a loan, you have to have at least a 1 month history of pay stubs if you are a full-time person. If you go from full-time to part-time, there's nothing we can do, and it would most likely be a dead deal.
Yeah, that's super important. If you're looking at changing careers, jobs, or anything like that, wait until after the loan process. Because, or if you're thinking about doing anything like that, talk to your originator first.
Right.
Because in some cases, you may have two borrowers on the loan, and it won't impact if one of the borrowers does change job, may not need to use their income or anything like that. So,
or if you change your job, like within the company, like if I went from being, a loan processor to in real estate to a loan processor in consumer lending, it's still within the same company. I would just need to recalculate based on the new income. That's not an issue. It's just mostly going from a full-time W-2 to either part-time or a full-time W-2 going to 1099. Yep. If it's a smooth transition from a like-to-like job with a like-to-like income, it's usually something we can work with.
Yeah. Big word to the wise. We do see this quite a bit. Right. Let's see, a couple more questions here. Can an adjoining land lot be purchased in combination with a primary lot as well?
I think it was with a primary residence refi was the question.
Yeah.
Yes and no. How that would work would be if I want to refinance my home and take some cash out, I can take cash out of any equity that I have during the refinance. And then what I would do is I would take that cash and turn around and do a cash purchase for the land. Yeah. So it's not, we can't treat it as a refi and a purchase at the same time. And that is actually something that comes up quite a bit. People are interested in buying land and not sure how to go about it, not sure whether they want a land loan, whether they want to do a cash out refinance, or maybe possibly a second mortgage. The challenges or the differences to the two, first thing I ask about is time. Is there a time constraint? Are you already under contract? And the reason being is that purchase transactions, we can generally get done in 30 days. And that is because there's a contract that we're going by. We're trying to meet the closing date on the contract. So that's a legal binding thing that we're, trying to follow. On a cash out refinance, if you make a verbal agreement or even a written contract to purchase a piece of land for cash, that may be on a 30-day timing, but your refinance, if you go for cash out refinance to get the funds out of your equity to purchase that land, or a second mortgage, those transactions might take longer. They can take
Yeah.
45 to 60 days.
Well, also too, and even if we do it within the 30 days on the refinance, there's that 3-day right of rescission, 3-day
Right.
waiting period on a refinance, which some borrowers don't realize. They may be closing on March the 28th, and they're supposed to be giving those funds for that purchase on March the 29th. But just remember, on a refinance, there is a federal rule of 3-day waiting period. It's called the 3-day right of rescission. It does not count Sundays. It does not count federal holidays. So you have to wait at least 3 days before that loan goes into effect.
Right.
And this has been in effect since I've been in the industry, 97,
Right.
98. And there's really pretty much no way of waiving that either.
Right.
People have asked, I want to waive it or I'll lose this property. It cannot be waived, pretty much. It cannot be waived. So,
Right. So if timing is an issue, then you most likely would need to do it as a land purchase transaction. If timing is not an issue, all of the options would be opened. Cost wise and interest rate wise, you might get a better rate, and the closing cost would be less if you did a second mortgage. You did cash out refinance, closing costs might be similar, maybe a little higher depending on your loan balance, your existing loan balance, how much you want to cash out, and if you do escrows and stuff like that, that's all factored in. So the closing costs, how to get that, the lowest would be to do a second mortgage if that is available to you.
Yeah.
If you own your current home free and clear, it would have to be a first mortgage product, but we can also do a HELOC, which doesn't have an origination fee. So that kind of keeps it down.
Yeah, the home equity line of credit, that one seems to be popular, especially these days. But and we've talked about these in our webinars, and you can go back and look at our webinars via YouTube on home equity lines of credit, second mortgages. Just be aware that home equity lines of credit, and generally this is going to be with most of your lenders, are tied to prime, which everybody heard yesterday. The Fed met yesterday and did raise rates. Prime, I haven't looked at today, but I do know prime's going up. So just to be aware of that. Again, rates still historically low. I mean, even on home equity lines of credit, second mortgages, first mortgages, land loans, rates, while going up and will be going up, in the near future, still are historically low. I know when I first got in the business in the late 90s, if you wanted to purchase a home, your best rate, you were looking at 8%, right around there, 8.5, maybe 7.5. You're lucky. So we have been, as they say, blessed and lucky to have low rates for a very long time now. But do be aware, rates are going up, and from all the forecasts I'm seeing, rates are going to continue to go up. So, but still historically low, still very low. We found an advertisement from a bank here a few months ago. It wasn't us, but it was a bank advertisement from like 1986, and I think 85 or 86, and said something about rates as low as 12 or 14%. So just be aware. If you go and look at the historical graphs of rates, right? I mean, seriously, you're going to see we have had great low rates for years now, and they are going up. But look at the history of mortgage rates and prime lending rate. You're going to see still historically low, very, very low. Let's see here. Talked about land value.
I think one of the questions I remember reading off the list was, once you buy the land, is there a specific period of time in which you have to build? And the answer is no. You actually don't have to build at all. You're not required to build. People buy land for a bunch of different reasons. Some people buy land because they do want to build. Some people buy land because they want to buy a manufactured home and put it on the land. Some people buy land. I've done several recently where a lot right next to their existing property has come up, and they want to purchase it so that nobody else buys it and builds there. That's there's once you buy it, you can do whatever you want with it, basically. The trick comes in when somebody is buying a large piece of land and then they then want to subdivide. Keep in mind, like if you buy a 20-acre property and your plan is to subdivide it, our lien is going to be on that full 20 acres. So subdivision could get a little bit complicated because you can't subdivide it while there's a lien on it.
There's a lien on it, correct. Right.
It depends. You can in certain situations, but it depends on, like, if let's say I want to subdivide it in half and I want to sell 10 of it and I want to keep 10 of it. The 10 that I keep has to be valued at least what my loan amount is. So type of thing, our collateral, whatever is left of our collateral still has to be the full collateral for whatever's left on the loan balance.
Yeah, and I had a friend. It's been recently. He had some land, and he purchased it years ago. I want to say 10, 12 years ago. And he is in the process of subdividing it right now. He's paid his loan down, his land loan down, and it's down so much that he's paid so much on it that one parcel that he is going to be parceling off, the sale of that is going to pay off his existing land loan. So he's got the other 4 available that are free and clear. So again, investment. That's why he bought it. This was his plan 10, 12 years ago. So it was actually an excellent plan because the sale of one of those lots is going to pay for what's owed currently on the land loan that he has right now with TVFCU. So excellent plan. It was a great plan. He's very smart. Highly recommended if you were wanting to do that and you had the money. And generally also too with land loans, the loan sizes are going to be smaller because you're not buying a $300,000, $400,000 home. It doesn't have a structure on it. So anyway, any last thoughts you want to throw in here, Tina, about land loans?
Yes, because we haven't talked about surveys.
Surveys, yes, that's another one.
Got to talk about the surveys. Surveys. Do you need a survey? Do you not need a survey? Sometimes we don't know. We don't know until the title company has done the title search and they look at the existing legal description. Sometimes it's okay and it's valid and we're good to go. Sometimes it's not, and they require another survey. This happens sometimes even when we're refinancing people's primary residences. So if that's the case, sometimes we don't know. I can tell you for sure that we will need a survey if you are buying from a seller who has a large piece of land and they're cutting out a portion of it to sell to you. That definitely going to need a survey. If it's an existing lot that has been the same parcel and, size for several years, chances are there's a survey somewhere in public record, and a new one may not be needed.
Correct.
The trick with the surveys right now is timing. They are taking months, 3 months, because the housing market around here especially has been so competitive, and the inventory has been down. A lot of people are just the ones that not finding what they want. They're just deciding to just buy land for now and we'll build on it in the future. There's so much land being sold and subdivided right now that those surveys, and of course in our area there's only going to be a certain amount of people that are qualified to do these surveys. They're just extremely backed up, and I think right now probably charging a higher premium because they're so busy. So they can get expensive and they can take a long time. So that is something that you want to discuss with the seller up front. If it's an existing parcel, like I mentioned, ask them if they're aware if there's a survey on file. That's something, that we'll know. If we know ahead of time there's a survey on file somewhere, then we can get that process started right away. But if we're going to have to wait 3 months for a survey, that could definitely delay. If you got a 30-day or a 45-day, 60-day closing, but we got to wait 3 months for a survey, then we're not going to be able to close during that contract date.
And then that's also true. And if they have a survey, it hasn't been recorded too. That's
has
something
to be recorded.
Needs to be recorded because it has to be official record.
Right.
So make sure if you're talking to a seller and they have done a survey, make sure it's been recorded too. Also, too, something I've run into over the years is surveys that were done many, many years ago and were kind of vague. Had one it was done in 1936. So the title company was requiring a new survey because, like I said, it was a large lot of land, and they want to make sure the boundaries are correct and it's accurate. Sometimes, way back when they weren't quite as accurate as they are now. So that's why a new survey may be required. Which brings me to my next one, and then we're going to finish this up here in just a second. Perk test. Tell us about perk test.
Perk test. A perk test is basically a soil test that will tell you whether that land can be built upon, whether it will accept a septic service, that type of thing. So if you are planning on building, you absolutely want to get a perk test.
Yeah.
Put that in as a contingency in your contract so that if it does not perk and you would not be able to build on it, you can exit out of that contract. No harm, no foul.
Yeah.
If you're not planning on building on it, you don't need a perk test. We don't require a perk test. That's something for you that is going to protect you. Especially, why do you want to, spend $50,000 on a piece of land that you want to build on if you can't build on it?
Yeah, I highly recommend it. I had an employee here. It's been 2 or 3, 4 years ago, and she was looking at a piece of land to purchase. She and her husband, and she called me and said, "Hey, what are recommendations?" And I was like, "Well, have you signed a contract yet?" And she said, "No." I said, "Well, I would check about a perk test first." And now this was back when they could have it done within a week or so, a week or two, and they got a perk test back. Property was high, and they tested it several times, high in mercury. So that's an issue. So she thanked me. She's like, "Thank you, Bryan. I'm glad we didn't, go into a contract on this. We're not going to be able to build on this, property later on." So definitely, perk tests like seminar or surveys are taking a long time. So because there are a limited number of people that are qualified to do that in our area. So make sure if you're going to get a perk test, again, which we highly recommend, the timing of it too. So I've heard sometimes it taking a month, 2, 3 months sometimes, depending on the area.
Right.
So yeah, definitely want to watch out for that. So, well, I think we've gone through a lot of things. Again, I think this is the 3rd time we've done our webinar on land loans. It's a very popular topic. Do share this with your friends. Tina, you want to say something?
I was going to say it's the 2nd time. This is land loans 2.0.
Second time. I know we've talked about it in previous ones when we talk about pre-qualifications purchasing, but it's probably, it is our most popular topic that we cover. It seems like a lot of people are interested in land loans. So hopefully we covered some really good things. Tina, again, excellent originator. If you have any questions, you'll want to reach out to Tina. And I think also too, we have a drawing here that we've drawn for the $100 Visa gift card. Lourdes Rivera is the winner of our $100 Visa gift card. Congratulations, Lourdes. I will be reaching out to you, and we'll see if we can get that $100 Visa gift card in your hand. So congratulations. We want to get some contact information here. Tina, how do we get a hold of you?
This is on your screen. You're going to see my webpage, and you're also going to see the main real estate phone number. My direct line is 423-634-3508, or you can email me at tina.peters@tvfcu.com.
And right there on our screen, you're going to see tvfcu.com/Tina Peters. That is her webpage. You can apply with her directly, whether you want to buy land, whether you want to refinance land, no cash out refinance, whether you want to purchase a home, you want to do a home equity line of credit, a second mortgage, anything like if you want to buy investment property, a second home, do reach out to us. Do reach out to Tina. We would love to hear from you. Be on the lookout for our next webinar next month. We're going to be doing a different topic, but we thank everybody for joining us today. Tina, thank you for all the information. Thanks for joining us today. If you have any questions, please let us know. Everybody have a great day and have a safe weekend. Thank you. Take care, everybody. See ya.
Bye.